Hi everyone, my name is Moe and welcome to another video of Income Investors. Today with me is John Whitefoot. Before we go into any details, understand that anything you hear in this video is for information and educational purposes only. Investing comes with risk, so do dividend stocks. To read more about risk involved when it comes to investing, please see the description below. There are a lot of dividend paying companies out there, but sometimes they may not be as consistent, or they may cut them, and it's just hard to find good and consistent dividend paying companies. One of the companies we're going to be talking about today is called Realty Income Corporation, and this company is different. John, can you tell me a little bit about Realty Income Corporation that's traded on New York Stock Exchange under symbol O?
Yeah, thanks, Mo. Realty Income Corp is one of the gold standards of dividend stocks, but they don't get the same attention as lots of other stocks do. But we'll get to that in a bit. But yeah, Realty Income Corporation is the largest triple net REIT in the U.S. and fourth largest REIT in the world. Its portfolio includes close to 12,500 real estate properties owned under long-term net lease agreements, and most significantly, 99% of its portfolio is occupied. They're leased to 1,260 different clients operating across 84 industries and located in all 50 states, Puerto Rico, the United Kingdom, and Spain. Again, people might be a little concerned about a REIT that has so many retail establishments, but a whopping 92% of its portfolio is resilient to economic downturns and or isolated from e-commerce pressures from giants like Amazon. By industry, grocery stores account for the largest percentage of contractual rent at 10%, followed by convenience stores, dollar stores, quick service restaurants, drugstores, and home improvement stores, and others. Some of its top clients, everyone knows, 7-Eleven, Dollar General, FedEx, Wynn Resorts, the gaming company, Home Depot, Kroger's, and Walgreens Boots. It's also expanding its portfolio all the time too.
Interesting. It definitely seems like they have a huge presence. Now, I know every REIT out there claims to pay, great income. How does Realty Income Corporation differ from, its peers?
It's really if you're looking for consistent, reliable, growing dividend, no one can compare. But it doesn't attract the same attention that some of its flashier peers does. And that may be because its dividend isn't as high. Right now it's at 4.9%, which isn't low either. That's erases inflation. It's also more than triple the S&P 500 average of 1.6%. But really sets Realty Income apart is that no one can compete with it when it comes to both the number of consecutive payouts and increases. As of April 2023, Realty Income has paid a dividend for 634 consecutive months. And it's also increased its dividend 120 times since going public in 1994. That means Realty Income shareholders have gotten a pay raise about once every quarter. Right now, it pays a monthly dividend of 0.225 per share, or $3.06. And over the last year, the payout has increased 4.7%. So almost keeping pace with inflation.
Yeah, and I mean, if you're working a corporate job, you don't get corporate quarterly raises here.
No, not even monthly raises. No, no.
How about its share price? How is that done?
Well, yeah, it's easy to get all excited and promote a ultra high yield dividend stock when the share price is tanking.
Right.
Because yield and share price work inversely to each other, but that's not the case with Realty Income. Right now, it's not exactly thumping the market. Its share prices are down 2% year over year, and it's lost 5% of its value over the last year. Down 2%, year to date, I should say. And part of the challenge might be investor optimism or lack thereof right now, which I think is entirely misguided.
Yeah, let's talk a little bit about Bed Bath & Beyond. John, it's interesting you mentioned about investor optimism. A few days ago, I actually read an article on Wall Street Journal The article was about this office building in San Francisco that was worth $300 million in 2019, and it's sold for 60 million now, and that's a huge haircut there. Explain a little bit about why Income Realty Corporation is different than any other REITs out there when it comes to its properties and things like that.
Yeah, that's a good point. Recent bankruptcy filings of Bed Bath & Beyond and the demise of Sears and Kmart certainly points to the demise of other big retail giants over the coming years. But new research from the big investment bank UBS suggests that up to 50,000 retail stores will close out of the current base of 940,000 stores in the US by 2027. This excludes gas and food services station. But interestingly, the closure underperforming chains, such as Bed Bath & Beyond, will open up the door for strong national players to make additional headway. The closure of 50,000 stores over the next 5 years have average sales per store of around 5.7 million, meaning there's 285 million of retail sales up for grabs. Some of those retail dollars will, of course, be funneled to online sales. So if we assume 25% of those sales go online, it means national chains like Walmart, Lowe's, Home Depot have the potential to reel in 214 billion in sales. This points to retail market taking a hit, but some obviously better companies are prepared than others. The point is, the retail market is definitely going to take a hit, but some are obviously better prepared to deal with online shopping in the competitive market than others. Many of those retails are already part of Realty Income's portfolio and could take up space left behind by other retailers. So, and as noted earlier, Realty Income has a really diversified portfolio with 92% of its total rent resilient to economic downturns and e-commerce pressure. And so I think there's a lot of opportunity for them to take advantage of potential closures.
And I mean, how did this strategy play out for Realty Income Corporation last quarter?
Yeah, despite the fact the company's share price has taken a hit, 2022 was a pretty great year. Total revenue is up 60%. Net income more than doubled to $1.42 per share. Normalized funds from operation increased 20% to $4.06 per share, while adjusted funds from operation increased 9.2% to $3.92 per share. On top of that, 2022 was a record year for acquisitions at $9 billion. This included a record $3.9 billion in the fourth quarter alone. It also announced its first acquisition in Italy and acquired its first gaming asset, the Wynn Encore Boston Harbor. So, and also Realty Income just released their first quarter results. And that momentum has continued into 2023. Revenue is up 17%, net income climbed 13%, normalized funds from operation was up almost 13%, adjusted funds from operation 12%, and it also increased its 2023 adjusted funds from operation share guidance to $3.94 to 4.03. And the future looks just as interesting with an investment capacity of 850 million, which should help it continue its legacy of raising its dividend every month.
John, thank you so much for analysis on Income Realty Corporation. When it comes to reliable dividends, Income Realty Corporation is up there. At the time of inflation, interest rates are rising. It could be a great way to generate income over long term. And keep in mind, this company pays monthly dividend. If you want to see more opportunities like Income Realty Corporations, you can head over to incomeinvestors.com. And thank you for watching this video. Don't forget to subscribe to our channel and like this video, and we'll see you soon.